morning, traders. This is the Q-Man for another edition of Tape Talk. Take a look first and foremost at the SPY, S&P 500. Look, technical analysis, does it work and therefore we play it, or do we play it and therefore it works? You know what? Who cares? The bottom line is, if it can give you an edge just determining where key support and resistance is, that's all we need to know. Take a look at where the SPY sold off yesterday at a descending trend line from February. This, if continuing lower, is now the second consecutive lower high. Notice the ascending trend that I've got here from the mid-August lows. We've yet to reach that high, but there are a few indices that have in fact kissed a descending, or I should say kissed an ascending trend line goodbye. We'll talk about those in a second. The bottom line is, I think many people were sucked in on a 50-day moving average break. A lot of those people are going to become uncomfortable if we in fact continue to falter from here. Keep an eye on the 130 mark. In my opinion, I think that January 28th high of 130 spot 35 is quite important, so keep an eye on that level. Take a look at the IWM. Talking about returning to the scene of the crime or kissing a trend line goodbye. Take a look at the ascending line here from August all the way up, broke down this trend, came up, kissed it goodbye. This, however, interestingly, did not reverse right at a descending trend. You can see how important this level is right here. It's between a breakdown and a breakout. So keep an eye on this level here. IWM, I think, is coming in and will have a very big move in the very near future. Qs, notably weak, outperformed last week on a relative basis, but technically still the laggard of the entire group. Giving back the 50-day moving average again. Light volume on the sell-off. A lot of bulls and bears would say, well, that's not very good. I'm going to tell you something. Light volume declining is indicative of true bearish behavior, almost a lack of interest. Keep an eye on the Qs. What does that bring me to? Well, 20% of the Qs is what? Apple. I've been waiting for Apple to return to the scene of the crime. Take a look at the ascending trend from September. I'm probably the only one in the entire world that wants to short this stock. I think secretly many people do. But the bottom line is, I'm looking for a short in the fruit. Where? On a break of Friday's low. 347. That's where I would get short Apple, 347, with a stop above yesterday's high, 354. Again, 347 is my short entry. Stop 354. Probably 50. Again, a stop above yesterday's high. Take a look at Costco. A lot of retail stocks looking very, very ominous here. Take a look at Costco breaking down wedge-like behavior, wedging up. Not too hot when you consider that discount retailers are really getting whacked, and I'm looking for a breakdown here. Now, technical analysis 101, if I can use the term, and I hesitate to do so because I don't think that there's any standard mark for technical analysis, but a traditional pattern would say to short on a break of this ascending line. So, in fact, it would be yesterday's low. I'm more inclined to wait until a breakdown of 70.50. Take a look at the February 2nd low. That's a very, very big level in my opinion. Costco is short below 70.50. Last but not least, take a look at RIG. Keep an eye. All eyes need to be on the 80 mark. RIG is putting in a head and shoulders and continues to fail at 80 or thereabouts. Yesterday's high is 79.42. Any backtracking towards the 79 or 80 level that does not stick, I will look to get short RIG. I've traded it once, looking to trade it again. The 60 minutes special is not going to help them. Any gap down here in RIG or immediate takeout of these lows, I have no interest. But any retracement back to the $79 level, I'm going to short the Rigster. All right, this is the Q-Man signing off. Hey, go to YouTube, sign up to get alerts when these are posted, and we'll talk to you soon.